everyone, this is Avijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of December 29th, recording this on January 4th. First of all, a very happy new year to everyone. Wishing everyone the best of investment success for 2026. Today, we will talk about a laggard in 2025, an industry that did not quite keep up to the outstanding gains that the semiconductor industry had, the internets, and so on. This is the software industry. We'll look at what are the charts telling us for the software industry to have a comeback in 2026. You often hear about the dogs of the Dow or the dogs of the stock market indices that tend to do well at the end of the year because of tax loss selling. And then when the year starts off the following year, those dogs or those underperformers tend to come back strong. Well, we shall see what happened. Turns out that the software industry, some of the key stocks did get a hit on the first trading day on January 2nd, which is this Friday. And we shall see what the charts are telling us in terms of the very near term. We look at the key ETF in this software industry called IGV. We look at some of the top holdings, the top 4 or 5 holdings. And in particular, in Barron's, they talked about Salesforce. We'll look at what the CRM chart is telling us. And we'll end with cryptos. We know that the cryptos have been a negative performer in 2025. So we'll look at the top crypto index, Bitcoin, and then the one of the popular altcoins that tends to do quite well which is the XRP. So with that, let's dive straight into our Substack site, chartsarefun.substack.com. We appreciate you subscribing to this. When these blogs come out at about 7 a.m., we'll get them to you through your email. Our YouTube site is also Charts Are Fun. We appreciate you subscribing to the channel. And then if you do like the videos, if you could hit the like button, we really appreciate that. Talked about the comparison of some of the key industries, technology related, as well as things that are beneficiaries of AI in 2025. And if you look at the top performer shown in black, that was the semiconductors. That shows up over 44% for the year, and close at its heels was the internet. We know that one of the biggest beneficiaries of the internet was Google. It did its outstandingly well in 2025 and helped dominate. It's a big percentage of the internet index, helped dominate the internet index to do so well, closing at 41.8, right at below the semiconductor 44. So that's the top 2 industries in 2025. The other 2 that came in very close to each other happens to be the huge data center growth that we have seen that has caused the computer hardware stocks to do very well, Dell in particular, and the HP, the various computer hardware stocks. In fact, even the storage stocks which fall under the computer hardware, like Seagate. In fact, Seagate was the Western Digital was the top performer of S&P 500, and Seagate came in, and Micron came in 2 and 3. So those 3 stocks are part of the computer hardware. So that came in line at almost 14% gain for the year, and right below it is the conventional electricity, because these data centers need electricity to power their data center demands for AI, for the GPUs, for the insatiable growth of the GPUs. You need electricity for them. And turns out that the ORCL and the various conventional electricity companies did quite well in 2025, came in right at 13.33. The laggard here shown in magenta is actually the software industry. That was up only a little over 6% in 2025. And if you look at the full year performance of these, in this case, we're looking at the 5 key sectors. What you can clearly see stand out is still up to July, the software industry came in right hand in hand with the semiconductor. We can see that the black and the magenta right on top of each other. And then from beginning of July, they started diverging. Semiconductor kept climbing all the way to up to peak at over 52.5% in October, gave up some of those gains and closed over 44% towards the end of the year. But software industry, which was as high as 22 and a half towards early July, gave up a lot of those gains and closed in up only about 6.8% for 2025. So if you look at the core ETF for this, the iShares ETF for software, it's called IGV, and you look at the top holdings. Microsoft is over 9% holding, Palantir is at 8.17, Oracle is at 8.22, Salesforce is at 7.97. So let's look at some of the top holdings. Before we do that, if you look at the chart of IGV, that iShares ETF, we can see a clear double top at 118, 117.99 in September. Then the next top formed in October, and from there a direct breakdown. As the second top formed, we can see negative divergence, as in much lower highs in RSI when the second top formed around 117.76 than when it was at 117.99. That's how topping patterns happen. So that double top then broke down, and that breakdown came in for a key test at support level at 98. We see that in the past 99, 98 was from where it broke out higher in the April to the May timeframe. So that then became support. It tested 98. RSI was deeply oversold, had a rebound, but then as it rebounded, it printed a pattern called a descending triangle. We can see that at about that 104 level is a horizontal support, and then lower highs at 110.85 in early December to 109.18. So if you take 104.67 to 110.85, that's roughly, you're talking about $6.18 or so. Subtract $6.18 from 104.67, you get 98.49. So that's where a retest of that 98.7, we believe, is in the cards. We see that on Friday, the first trading day of the year, IGV was down 2.9%. And look at the volume, relatively higher than the previous. Of course, holiday trading volume was muted, but this volume shown in red was pretty decently higher than in the past several days of trading. So, bearish looking candle where it opened towards the high and closed towards the lows. That breakdown, as we say, from this descending triangle has further downside measured towards a retest. So we shall see if it is able to do a W shape. We can't rule out maybe if the bulls take control at that 98 level support, and if this turns out to be a W shape double bottom. In that case, that would be very bullish. And if RSI forms a higher low, then that could mean that a W-shaped double bottom from 98 to 110 is 12, at 12 to 110, 122. So that's not completely ruled out that IGV will break down below 98, but if it does break down below 98, and look at the 50 period moving average shown in blue, headed to have a death cross below the 200 period moving average. So if that death cross happens, the break below 98 happens, then we're talking about a much more bearish pattern. From 98 to 117, we're talking about $19 of height. So $19 from 98 measures down to $79, which is the level from where it took off from that April low. So potentially that could be a very bearish move for the software industry, something for us to look at. And looking from the key holdings, as we said, the top holding is Microsoft at 9%. So let's look at Microsoft's chart, its daily chart. A very similar pattern as IGV, a double top at 553. The second top formed with a lower high in RSI. That's how negative divergence patterns happen. That's how topping patterns happen. So retest of that 552, 553 with a lower high in RSI. Then the breakdown. That breakdown now tested a key level at near its 200 period moving average, slightly below it at 464. The 200 period moving average is climbing, but look at the first trading day of the year, down 2.2%. Look at volume, relatively higher than the last several days. So strong volume, a bearish breakdown on the first trading day. So far, this is got to hold 464. We can see that RSI so far is printing higher lows, which is bullish. But if RSI does break down below 30, and if MACD does break down, to lower lows as well, this measure target from 464 to 552, we're talking about $88 in this move. So $88 subtracted from close to 464 is actually a lot lower. We're talking about all the way down towards, 370 or so is 372 or 376 is where we think this could break down to. So that's something for us to look into. But if the breakdown holds this key gap resistance support, which we believe could hold it out here, in that case, the gap resistance support is right at, if you hover over the level here, we can see that the low of that gap up on early May was at 422. So we believe that 422 would hold it as strong support, and maybe if we do get the breakdown, it would probably rebound from that 422 level. So this is the pattern on call it a bearish double top pattern on Microsoft that we're watching. This RSI breaking below the previous lows would be a bearish sign, and so with the MACD. If this does hold 464 and rebounds higher, then that could be bullish. But if it doesn't, it has a bearish picture of a potential possibility of it heading down all the way down towards the 422 is what we think. Now, if you look at the double top and M-shaped double top, that typically measures from 491 to 552. You're talking about $61. Subtract 61 from 491, that's $430. So that is just the M-shaped double top pattern breakdown. So 430, maybe a gap close at 422 is a possibility. Not so much of a gap close, but the test of the gap. The gap close will go all the way down towards 400 from where the gap started. So we don't expect it to go that far lower because of very heavy volume. This could potentially act as very strong support at 422. So 422 to 430 is the downside, but if it holds 460 and then rebounds, then potentially this could try to reclaim 500 and make another climb. Palantir potentially also has a very bearish looking pattern. If you look at the neckline at about 142, 147, that left shoulder at 190 down to 142, head at 207 down to 147, recent right shoulder at 198. Look at the breakdown, 5.56% sell off on the first trading day of the year. That's not a good start to the year. Higher volume than the last several days. And this breakdown, if you do get it, is a significantly lower downside at 87.6 if you do get this head and shoulder breakdown. Perhaps it may not be the case. It may hold very strong support at its rising 200-day moving average. We know that this is a very high momentum of the best performance among the AI software stocks. So if this holds this 200-day period moving average in the 140s to 150, then maybe it could recover and maybe climb up to new highs above 200. But this negative divergence with lower highs in RSI as it formed the head, lower high in RSI as it formed a higher high. And this breakdown would be very ominous if it does break down, breaks below 200 and breaks below this head and shoulder pattern for us to be watching. Oracle is more of an infrastructure stock than software stock. We know that they've the best, the biggest database company, has tremendous revenue from database and business applications. Like they have their ERP software and then their major other business application software that's out there. But this stock had recently formed a low at 177 towards the December timeframe. But as the lower low in price happened, look at RSI forming a higher low. So this is the flip opposite of what we saw with Palantir and Microsoft. Instead of negative divergence, we are seeing a positive divergence in Oracle. So a lower low in price with a higher low in RSI. This could mean this pattern right here. They left a gap, sold off in December after earnings. But if this forms this cup and handle and breaks higher above 200, this breakout from 177 to 200 is $23. At 23 to 200 takes it towards 223, which is right above the declining 50 period moving average is 221. So this could come back and retest the key level of resistance at 225 from where it broke down. So that gap close and a test of that 223 to 225 seems to be in the cards for Oracle. So we are a bit constructive on Oracle, especially looking at the positive divergence in RSI and MACD printing lower, higher lows in MACD, in RSI and MACD, and this potential cup and handle. So that's something we're looking at for Oracle. Look at it actually diverged from the rest of the software stocks. Rest of the software stocks were all negative on the first trading day on January 2nd. Oracle was up plus 0.4%. So this is more of an infrastructure player. Oracle is big into cloud growth. They're dominating in selling GPU and AI infrastructure to OpenAI and a bunch of other key companies. And Oracle, as a result, is now playing more as a computer hardware data center growth kind of a play than really a software play, and hence is bucking the trend. Though it did, significantly after shooting significantly higher in September, gave up all those gains because this shot up was when they claimed that they would have almost outstanding revenue for the next 4 or 5 years of over $300 to $400 billion of revenue, primarily coming from infrastructure growth. That's how they kind of claim their growth coming in. But then market got concerned about their, the debt that they had to raise to grow this infrastructure. How would they be buying and rolling out these data centers with that much of debt? And what if that return on investment on all that debt raised does not pay off and they don't get enough profit margins out of these data centers selling those GPUs because they have very high depreciation? There was Michael Burry, a very well-known investor who made his name during the 2007 housing collapse. He was the one who was behind the movie Big Short. He has recently made very bearish statements about this whole infrastructure companies and the potential for them not paying out with respect to the huge investments they're making on GPUs. So if Oracle, as a result, got hit hard, if they are able to raise debt and have figured out a way to power the GPU growth, then maybe you could have a counter trend move and break above the 200 key resistance and go at least towards the 225, something for us to look into. Now we're going to talk about Salesforce because that was the one that was covered in Barron's as potentially a laggard in 2025, but could be a comeback play. The chart is constructive. We can see a similar positive divergence like Oracle. This is, of course, a pure software play, not playing a data center growth like Oracle with their cloud business. This is a pure software play, but they are driving a significant momentum in the AI business with their agentic technology. They have what they call as their SaaS offering called Agent Force, and that's seeing over 300% year over year growth with over 500 million of revenue. This is recurring revenue from over 50% of their current customers. So this got a bullish article, bullish nod from Barron's, and this chart looks constructive. Positive divergence, higher lows in RSI as it formed a very interesting pattern of a complex inverse head and shoulder. We can see multiple attempts at the left shoulder in the 253 level, then a head test at 273, complex head formation. So that's the left shoulder, complex head formation with 225 to 221 being tested. But as the second low of 221 below the 225 got tested, RSI printed a higher low, MACD printed a higher low. So that's positive. That's a bullish positive divergence pattern. Now it could be forming that complex right shoulder range bound between the 270 to that 250 level. It needs to hold that rising 50 period moving average at 250. That's the key level for it to hold. If it is able to hold, be a range bound in the 250 to 270 and then break higher, that break higher from a 221 to a 270, you're talking 50 add to 270, you're talking about 320 is potential possibility of where Salesforce could climb, which is reclaiming the previous highs at May at 294. It actually just a year back towards late 2024 had tested a level of 369, which was from a price over sales, which is an average software company in S&P 500 trades at 9 times sales. That's what Salesforce was trading at 9 times sales. And then the 2025 kind of AI apprehension for them being able to monetize AI with all their investments hit the stock, and it is now trading below 6 times sales. So this was the Barron's article saying Salesforce is ready to emerge as an AI winner by the stock. And this is one where looking at the chart, we agree with what Barron's is making a statement on. We do believe that this is a bullish positive divergence pattern. So if you do look into the software play, we would be cautious on Microsoft, we'd be cautious on Palantir, but we seem to be at least near-term constructive on Oracle and Salesforce because of the technical patterns of positive divergence on its charts. And then what the Barron's article talked about is some of the key factors here that says annual recurring revenue grew at 330% on their Agent Force, which is their agentic AI technology, which has now crossed 540 million in the most recent quarter. The profit margins are healthily improving. It improved 15% to 33%. And in the software industry, they have something called the rule of 40, where the profit margin and the top line growth together should add up to 40 or higher. So if you look at Salesforce, profit margins at 33%. To hit the rule of 40, you need a 7% top line growth. Turns out the 2026 sales forecast is 11% year over year top line growth. So that healthily meets the rule of 40. And what this article says that if they continue to maintain their profit margins, maintaining their upside should be pretty much a given and a safe bet for Salesforce to have an upside, is what this article is talking about. Also, from a technical level, if you look at this red, which is the 200 period moving average, which is declining, as we can see, recently it has started flattening out. It has started plateauing. That's also a healthy sign. Also, look at since that early March, after it went below the 200 period moving average, it failed every time it tried to go above the 200. It was not able to make it out in May. It kind of declined all the way, came close, could not make it. Very recently, in the month of December, it has taken it out, tested it below it, came up again. Now, this is a bearish candle, no question. But if it is able to hold the 50 period at 250 and reclaim the 269, that's a very bullish constructive chart formation. So we look for that breakout above 270. And as I said, from 220 to 270, talking about a $50 move, expecting 270 to 53.20 is where anywhere from 315 to 320 is where we believe Salesforce could land in 2026. Finally, we're going to end with cryptos. We talked about, we believe we are constructive on Bitcoin. We have talked about this in our last few videos as well. Notice that this is a 4-hourly chart, 240 minutes, 4-hourly chart. In this base that is formed between 84 to 90, that's $6,000 200 is what that base is. That breakout, it did break above 90,600, testing 91.8. And this is after the weekend Venezuelan crisis that we've seen with the US taking over Venezuela, President Maduro being, kind of captured and brought over to New York for his indictment. That, in spite of all that uncertainty, Bitcoin seems to have taken out a new high from the last several days of trading at 91,800. So that's the breakout. We saw strong volume on that breakout towards on Saturday. That breakout from 84 to 90, that's 6,000 added to 90 is 96, above that early December level of 94,600 from where it failed. So we expect upside. We see RSI's hit a higher high right above 70. Now it's hovering near 70. We see MACD's climbing, hitting a higher high from previous levels, getting closer towards the early December. So if it is able to break from 84 to 96 and then from there break higher, that's 12,084 to 96 added towards 96, that's 108. That's potentially a possibility where we see at least, if not 96, 94 and 94 and a half, 94.6 seems to be a possible test in the next few days. And from there, maybe a pullback of a handle and then the breakout. Look at the 50 period is climbing. The 200 period has also begun to climb. And this time, last time it came close to having a bullish cross, it failed. And then the 50 started declining again. This time it is climbing. Maybe this time it is able to break out. MACD climbing. Last time when it tried to kind of break higher, MACD was declining, RSI was declining. That was a bearish sign. This time when it is coming in to take out the 50 above the 200, we can see that MACD is climbing higher highs, RSI is climbing higher highs. So this time the setup is quite different. It's more of a bullish setup, and we believe Bitcoin is poised for a break higher in the next few days. And an altcoin that is heavily momentum play and does very well with in the crypto space is XRP. It's of course a $2 investment, per coin, unlike the Bitcoin, which is 94, like 90,000, 91,000. So a $2 investment, but look at percentage wise the growth. This is also formed a beautiful base from 1.77 to 1.95. That's about 18 cents added to 1.95. That's 2.13. It almost came close to the testing there, 2.12. Very strong RSI, a nice vertical climb. We can see heavy volume in that breakout. This is also the 50 climbing to break bullishly above the 200. That is also a bullish formation. MACD climbing higher highs, RSI climbing higher highs. All of this is a setup where we believe that this from 1.77 to a 2.17 maybe is where it tests. So that's roughly 40 cents added to 2.17, 2.57 is where we think the XRP could be headed in the next several days. So that, let's just sum it up. We believe that in the industries that have, performed in 2025, technology-related, AI-related, one that has suffered the most is the software industry. We often say that what suffers the previous year, the beginning of the year, tends to come back as the dog of the Dow kind of a theory idea. These are not necessarily Dow stocks, but though Salesforce is, but these are just dogs underperformers of the overall index. And we can see here that the software industry was the worst performer. The top two in this particular case was semiconductors, and right to its heels was the internet, thanks to Google, and semiconductor, thanks to NVIDIA. And then we can see that the next two were at 14%, the hardware, Dell and Oracle. Some of these, Oracle is a software industry stock, but the overall, in particular, the semiconductor, the storage stocks like the Western Digital and Seagate and Micron are all part of the hardware industry. That did about the same level as the conventional electricity, the utilities that powered energy into the data center. So those were at 14%, and the laggard was software. IGV, these are the top holdings: Microsoft, Palantir, Oracle, Salesforce. And if you look at the IGV chart, that has a potential breakdown on the double top. That's very bearish. Negative divergence on the breakdown from 117, though it is testing 98. It is poised to retest at 98, and one should just be careful. If it is breaks below 98, then we're talking about a significantly more bearish potential for software stocks. And in that case, we could be measured target all the way down from 117 to 98. That's $19 subtracted from 98 brings us to 79. That's the downside. So that's a very bearish downside on software. However, if 98 holds, that's a W shape, and then it recovers with a higher low in RSI and a higher low in MACD. That would then measure to a 98 to 110. That's 12, at 12 to 112, 122 new highs above this highs at 118. That's potentially a possible, but we're going to watch the software sector over the next few days and see, is the critical level of 98 holding, or is it breaking below? And that 50 period declining, potentially having a death cross below the 200 with a break of 98 on heavy volume would definitely indicate downside all the way to 78, and we would step out and kind of put a stop loss and get away from the software industry at that time. Microsoft is also at a key level. It broke below its 200 period moving average on Friday, was down 2.2%, and we can see that this is a key level of 464. It also has a double top, 553, tested twice with negative divergence. 491 to 553, we're talking about $61. Subtract from 491, that's 430. So that's the measured double top target on Microsoft. 430 is potentially close to its top of gap support at 422. So 422 to 430, we believe, is where Microsoft is headed, and we would stay away from this stock for now. Palantir also has a very bearish looking chart. Negative divergence as it formed its higher high from 190 to 207. The second high potentially, the third high potentially could be the right shoulder of a head and shoulder pattern. That breakdown is significant downside from 147 down to 87. We don't think it'll go down that far. Perhaps it's geared to test its rising 200 period moving average at 150, and that could hold a strong support. But we will be watching this breakdown. If this breakdown happens and we get significant volume momentum in smart money selling off in Palantir, then it is a fast moving stock. It could very quickly head down, but that would mean market would have significant downside for Palantir to be able to go down to that level if it does in 2026. Oracle potentially as a near-term bullish pattern with a cup and handle, positive divergence on its RSI, positive divergence on its MACD. That measure target is 223, a retest of the 225 level from where it broke down with heavy volume. So we think that's where it is headed. We shall see if it breaks above 200 in the next few days. Salesforce also has a bullish pattern, potentially a very strong base being formed between 220 and 270. That's a $50 move, breaking up from 270 to 320 is where we think the upside on CRM Salesforce is. Barron had a very bullish article on Salesforce talking about their AI-related revenue from Agentforce growing at 330% year over year, over 540 million of recurring revenue already. Margins healthily improving at 33%. That's their net margins. And also their 2026 sales are expected to grow 11% year over year. They talk about a rule of 40. Margins plus top line growth exceeding 40. We see that margins is at 33, top line growth is at 11. So 33 plus 11 is 44, healthily meeting the rule of 40 target for software stocks. And we know that S&P 500 typically sells at 9 times sales, and Dreamforce, the Salesforce right now is selling at 6 times sales. So with this potential upside for it to take out something of a 9 times sales potential and climb above the 300 easily in 2026. Crypto's looking bullish. We feel that in the last, beginning of 2026 is when we seen then the climb took off. It was kind of range bound between 84 to 90. It since then broke out in beginning of the year. So that breakout from 84 to 90 near term is 6,000, 96,000. We know that the previous highs of early December, 94,500, will act as resistance. But even if it does and then breaks higher, you're talking about 84 to 94. 10,000 at 10,094 104, but if you say 84 to 96, 12,000, and that at 296, we're talking about 108,000. So we think anywhere from 104 to 108,000 is where we think Bitcoin could head in the next couple of months. We are bullish on Bitcoin, and the altcoin XRP has also got a beautiful strong volume move breakout. We think that this kind of is poised for additional upside. 2.17 is near-term resistance. 177 to 2.17 is 40 cents. Added to 2.17 is 257. So we think 257, 255 is where XRP is headed near term, and we are very bullish on this as the altcoin. With that, good luck investing. We'll talk to you next week. Thank you.